Hello, welcome back. We're at PDAC Day 3, and I'm with Ian Harris, the CEO of Outcrop Silver and Gold. Ian, good to see you.
Pleasure to be here. Thanks for having me.
More than welcome. Just for those less familiar, brief reminder of who Outcrop are.
So Outcrop is a very unique project because it's one of the very few primary silver and very high-grade projects. It's located, our Santa Ana flagship is located in Colombia, and truly one of the very few, both primary silver and very high grade.
Okay, and just a quick run through of the cap structure.
Oh, right now we have about 300 million shares out. We have a very strong backing by Eric Sprott personally, and we're traded on the TSXV. And our market cap today is a little over 30 million, and hopefully we've had some positive days recently, so hopefully it keeps continuing up.
Good. Okay, good. And let's just remind people what's in the ground at the moment, because I think did you release a resource last year, didn't you?
That is correct. And there was a big change last year. I joined the company in July of last year. Joe moved to the board. He was the guy who really discovered it. He was the exploration geologist. I'm a mining engineer with 25 years and 15 of those in Latin America, but much post-discovery, develop a strategy to move a project forward. So we had a little bit over 27 million ounces total of silver, very high grade, but in a very localized section of just the eastern tidal areas. And really the work to that date was proving out that this is a resource that holds together. And now it's time to shift that strategy and look at a bigger picture.
Good. Okay, because scale is important in this game sometimes. So obviously, you said it's high grade there. Just remind us of the actual numbers in terms of...
Oh, yeah, now you're going to make me quote, but it's the indicated grade is over 600 grams per ton on an equivalent basis, and about 440 pure silver. So even on a silver basis, it's hard to find even a producing silver mine with silver grades of that level. It's about 73% of the overall resource. The value is in silver. It's a true primary silver project.
Good. Okay. And I just want to, before we go into the new strategy, because I think that's really important, and I'm quite excited by myself, but just remind us how this looks in terms of the widths and the mineability and the structures, because we've been talking in the past, and you've been talking about these 15 different prospects that we're going to go on and we're going to talk about, but what is the actual mineability of this at the moment, and what's the potential scale here in terms of how you're thinking about this?
So of my time, I've actually been about now coming up on 8 years in Colombia and put in several mine mounts in the gold space, actually. And this is very common in Colombia. That's the first thing I want people to get their head around. We're on average about 80 centimeters on average. Obviously, some of the areas are much wider. Some areas maybe a little narrower. Our minimum mining width for a resource was 80 centimeters. But this is soup du jour in Colombia. And some of the largest mines in Colombia today, if you look at Boritica, Marmato, El Silencio, that are producing over 200,000 gold ounces a year, these are not small projects, are also work on these types of vein structures. So it's very common mining in Colombia. They're experienced in it. Obviously, there's a cost structure that makes it still very attractive. So it's a very doable. It's not something we're making up. It's something that's very common in Colombia. And so when we did the original resource, it was really focusing on a smaller area to prove, hey, wow, you got some spectacular grades coming out of your drill holes, but does it hold together? Does it hold together as a resource? We did a very high level of drilling that was in the indicated category to even demonstrate you're not just taking high grades and smearing it across a vein, because you have individual veins, but then you have individual ore shoots. And so it's a little bit of a chase to hunt those down. Yeah. So our resource is really based on 6 veins. There's 7, but 6 kind of equally contribute a significant amount of ounces, each one of them. And as you mentioned, to date, we have an 18-kilometer corridor, and along that corridor, we've converted drill-ready targets. So there's about 15 of them where we've mapped the vein, we've either channel sampled or trenched the vein, and we know that it's carrying the grades that are economic grades. So it's difficult when you put out a resource because many people say, oh, that's what they got. I might get 5% bigger, etc. So the next step for us is taking very large step outs along that corridor. And our plan this year is actually to go from the very top southeast all the way to the bottom northeast to the bottom southwest, to hit and go and drill test some of these targets to be able to demonstrate the potential of the corridor, right? Instead of just continuing to drill and drill out resources, is really to give a bigger picture that this is a resource that can double, triple, quadruple, et cetera, and show a pathway to a much larger resource. That's our primary strategy, not the only one, but our primary strategy for creating value for our shareholders this year.
Okay, so was it 27 million tons at the moment in the existing 6 ore shoots that you've found, essentially, right? And you're now going off and you're going to be testing how many?
So this year, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and some of them, because of location, it's actually the same structure, and we're still producing them as we go. We're still finding and mapping and bringing targets to drill ready as we go. For me, it's more important to demonstrate, and even if it's big jumps, to demonstrate there's potential resource here, there's potential resource here, and you can just see it. It's a lot more visual, because I think in the silver space, that 100 million ounce number is very important, and so be able to demonstrate a pathway to get to that number, for me, is critical. After the 100 million, to 100 to 200 million, those individual ounces don't create as much value, but you now have a robust enough resource that you can then go into the project development stage, which helps, right? And start moving it towards production.
Good. Okay, so that's really one of the key drivers this year, is to prove that this is scalable enough to get to that 100 million mark and then make an ultimate production decision on this project. And obviously, with the grade that you are receiving at the moment, ideally, that's you don't have to find lots in terms of tonnage with the current grade that you have to really build those numbers up, I'd imagine.
Yeah, so I like working on strategies that are going to create value independent of market conditions, because obviously market right now is not great. There's always the belief in silver. It's many years in supply deficit, like 3 years. It's like equivalent to 30% of the world's production coming out of mines. It's significant. And we are highly tied to silver because 73% of our resource is silver. So if people are looking for silver plays because they believe in the silver story, Outcrop is an ideal project. But I like being independent of that. I still want to create value. If we're spending dollars, we want to create dollars. So the big strategy I explained is demonstrating how you have a pathway to get to a much bigger resource. But is also the second set of that work is demonstrating the true uniqueness of this project, because we have high grade is great. It demonstrates how much is in the ground. The next step after how much is in the ground is recovery. And we did metallurgical test work, flotation only, not even including a combination of gravity and flotation, with 93% recovery of silver. Spectacular. So, okay, you're going to pull it out of the ground, and now you're going to have it in something that you sell. And a lot of people miss that component, right? Because there's a payable on what product you produce. If you put it in a zinc con or a lead con, sometimes you only get paid 60 to 75% of the silver value in that concentrate, right? If you can get it to a precious metal concentrate, especially a high-grade precious metal concentrate, the payable goes up. But if you can get it into doré, you're going to get paid 98 to 99%. So the really cool part about this project is 88% of the silver is a sulfide. So the silver is floating. It's not floating with another material. It's not being carried along with a lead or a zinc or a pyrite. It's floating. So we produced a very, very, very high grade concentrate. And actually over the last 6 months, I've been saying, you can direct smelt this. You can take that directly and turn it into a silver bar. And actually a couple of weeks ago, we actually did. We said, go ahead, smelt it. And we produced a silver bar to be able to prove that you can go right from a flotation concentrate and produce a doré without leaching, without cyanide. So from an environmental and a permitting perspective, it's exciting, but you also, because you start with a high value, you maintain that value through the stream. And that means you can produce a project that is decoupled from scale. And that's the other way we're going. Obviously, we want to be able to demonstrate that we can get a project into production, we can produce a high payable concentrate, or go directly to smelting, demonstrate to community, build capacity on a very, very small scale, and still be able to have a profitable operation, even if it's a pilot operation that might be able to cover, for example, a drill running all year long. And that also decouples you slightly from market, proves to market, so you have the both pathways. Because as soon as you get to 100 million ounces, they're going to go, well, can you get it into production? And then obviously you have the proof of product.
Let's talk about it, because this is this is the second arm of the strategy, right? It's you're building a pilot plant where you'll be producing, it'll be about 40 tons per day. So it's fairly small, but obviously, like we said before, the grades are very high. So talk us a little bit about the rationale behind building a pilot plant, because it's not, I guess in other commodities, it's a necessity where you have to really prove your product, like graphite or manganese and other commodities. You most of the time you have to do this. You don't necessarily have to, but why are you?
One of the reasons I think is a lot of companies are scared to do it, right? Because they're exploration geologists or et cetera. And because I've had the experience and it's not that big of a deal, we're looking at a maximum of 40 tons per day, because that would be considered a small scale operation within Colombia. And we truly, it's not production, it's a demonstration. Okay, but it's nicer when the demonstration also is profitable, because obviously at a larger size, it should still be profitable. So it's checking those boxes to de-risk the project. It's really about demonstrating the de-risking of the project and also to build capacity locally. But at 40 tons per day, it's a ball mill the size of this table. That's an exaggeration, but it's not big. It's really, really small. I mean, it would be if another project wanted to prove their metallurgical process on a bench scale, and then you go to pilot scale to be able to prove something out. It's very small. It's a plate you can pull off of the supermarket shelf kind of size and scale. And so therefore it's not we're talking a couple $1 million in CapEx maximum, including the working capital. So it's a very low hurdle. And then sometimes when I tell this story, why don't you go bigger? Because we are still an exploration story. It's still about the 100 million ounces is where the value in Outcrop is. It's getting to 100, getting to 200. That is where the real value in this project is. But obviously you get a different rating because you can prove you can get it across the finish line. It's truly de-risks the project in a major way. So we're trying to, those two factors, you get paid on number of ounces and probability of becoming a future mine, and we're working on both of those at the same time to create value for our shareholders.
Well, it's interesting as well, because usually with these pilot, like I was saying before, they actually don't make any money, and they're sort of something you just have to go through the motion of doing. Whereas you were essentially mentioning there that could be something that could pay for a drill rig or pay for this could, I guess, in a sense, leave you less vulnerable to equity markets or capital markets if we are in a tough period, and potentially help you fund exploration through all weather of environment.
I truly believe that would be a secondary benefit. It's an important secondary benefit, but it's more important to get the value out of the project by demonstrating the ability to have a pathway into production and de-risking it, right? Obviously, an added de-risk is, and when we do it, it has a high chance of being profitable. So that part is important to us, but it won't be the primary driver of the project, right? But when you have the grades, you have the recovery, you have the payable, you're getting a lot of value out each ton that comes out of the ground, even if it's on a small scale. As I mentioned, that decoupling from scale. A lot of projects need to be gigantic because you need the economies of scale. And so that will be nice to be able to prove that on the Santa Ana project also.
Good. Okay. Well, just walk me through the next 12 months or so. I know you're doing a cap raise at the moment. I think you announced yesterday that you were looking to close around 3 million. Well, obviously, as always, I'm sure there's potential for upsides, but assuming that you're funded in the next however long, what would be the use of proceeds for that, and what are you looking to achieve this year?
In this market, it's one drill turning. If the market changes, then obviously there's different conditions, but right now you're not getting as much value. So just one drill turning for us is enough. We got plenty of work to take this long program. We're testing basically 3 areas within the overall corridor. That's a big part. And the other part is this pilot concept. And because it's not a normal concept, it's really working with the government to bring it together as for capacity building and technology, the ability to produce a silver directly from concentrate without cyanide, et cetera, et cetera. But it's a social, government, and company program, so we want to make sure that we're involving as many players, universities, the local community, into the project together. and taking it down a permitting timeline.
Good. Ian, thank you for your time.
Thank you very much for letting me be here.